Beta Drugs Limited has given 5x return in last 4 years and 60% return in last 4 months only. So the main and biggest question is this growth is going to be continue. Hello and welcome back to Invest with Sanjeev KMR VGP. I am Sanjeev Kumar, your stock market mentor. Whenever we buy the share of any company, after buying, we usually see the price of the share start falling down. But I have a solution. If you do analysis and if you go deep analysis in any stock, and after analysis, if you are buying the share, and after buying, if the share price start falling, then you will not feel fearful because you know the company is fundamental. You have already read the chart of the company. So in this video, I'm going to discuss about Beta Drugs Limited. I will do sector analysis, industry analysis, companies fundamental analysis, order, technical analysis, chart, everything we are going to discuss. So that if you want to make the entry in this share, you will not feel fearful if company starts falling down. For that, actually, I have created a presentation file. Before moving forward, this is a disclaimer that I am not a SEBI registered advisor. I am creating this video for educational purpose only, and this share or any share is not my recommendation. Thank you so much. Just moving to next slides. Beta Drugs Limited, this is small cap. Sector is healthcare and industry, pharmaceuticals and drugs. Actually, I have created a video of Newland Lab. That company also belong to the same sector and same industry. And that company is also fundamentally strong. If you have not watched that video, please watch. You must watch that video. I will share the link of that video here. So under healthcare sector, there are three industries. One is medical equipment, second is hospital and healthcare services, and third is pharmaceuticals and drugs. So this company, Beta Drugs Limited, comes under pharmaceuticals and drugs. At first, we do sector analysis. So there is 4% contribution of this sector to India's GDP. And if you talk about historic growth, 22% CAGR. This is the rate from 2016 it is growing. Okay. And if you talk about what is the expectation of the growth, it is going to grow at the rate of 19 to 20% CAGR in next 5 years. And it will potentially reach $610 billion by 2026. What is the reason of this expectation? You must understand, due to aging population, more lifestyle disease, and digital health innovation. These are the reason for this expectation. Now moving to next slide, and from this slide you will get more conviction about this sector, because these are the elements of this sector. Due to this element, this sector is growing rapidly. Medical devices market, it is growing at the rate of 15%. Telemedicine, it is growing at the rate of 31%. Diagnostic market, 20% CAGR. Medical tourism is going to reach $13 billion. Now we jump to industry analysis, that is pharmaceuticals and drugs. The contribution of this industry to healthcare sector is huge. And past decade, last 10 years, this industry has grown at the rate of 10% CAGR. And what is the expectation of growth of this industry? 12% from this year to 2032. And contribution to GDP is 2%, and there is expectation to 3 to 5%. Export market, yes. India is one of the largest generic drug exporters, and India is covering more than 20% of global demand, which has strengthened its position as a key pharmaceuticals exporter. And one more thing, Indian companies are increasing exports to emerging markets in Asia, Africa, and Latin America. Now talk about this company, Drugs Ltd. It is founded in 2005. And this company specializes in oncology drugs. This is related to cancer treatment. Key customers and market. The company serves major hospitals and healthcare providers in India and exports to countries in Asia, Africa, and Latin America. Now talk about subsidiaries and partnership. 50 plus companies. There is partnership with 50 plus companies at present. And 20 plus top pharma companies are associated since last 5 years. And the biggest names are Glenmark, Torrent Pharma, Reliance Life Science, and Cadila. And the company owns subsidiaries like Adley Lab Limited. And due to this, it has a strong power in R&D and manufacturing capabilities for cancer drugs. Compliance and quality certification, WHO GMP certified. Increasing global demand for oncology drugs, because cancer cases are growing day by day globally. And oncology drugs market is projected to grow significantly. The global oncology drugs market is expected to have a 8% CAGR growth from 2022 to 2030. And the main driver is demand for new treatments and better access to healthcare in emerging markets, aligning with Beta Drugs product focus on cancer therapeutics. 125 products already launched in oncology sector, and 25 new products is in pipeline, and it will be live by 2026. Market reach, present in 46 plus countries and 231 registration as of that date, and 600 plus registration is in pipeline. There is presence in 85% corporate and government hospitals. Market position. The ranking of this company is under top 10 in oncology companies, and some products come under top 5 in their respective categories. New venture. Company entered in cosmetology segment and growing its customer base to 6,000 and its prescriber base from 700 to 1100. And the sales growth achieved 1 crore in April, and the target is to reach 15 crore by the end of next year. Additionally, there is a planning of company to start a new manufacturing unit by 2026, and company is going to capex 30 to 35 crore rupees. This is the revenue and shareholding slides. Main revenue comes from India 83% and 17% from rest of the world. Promoter holding 67%, FII 1%, DII less than 1%, and public 32%. Market cap is 2033 crore only. ROC very good, 32%. And ROC 7 years is also more than 15%. Debt to equity ratio is negligible. Place percentage, there is no place. Promoters holding is also good. And sales growth is more than 30%. OPM, operating profit margin, is also more than 15%. Company is fundamentally strong. Revenue is growing year on year, 91 to 116, 184, 227, 296, and trailing 12 months is 335 crore. Net profit is also increasing, 12 to 25 crore, 21 to 22, double. 25 to 31 crore, 31 to 36, and 36 to 41 crore. Net profit is also growing. Earning per share is increasing. Price to earning ratio is also growing. This is the technical slides. So it has given 560 return in 4 years, last 4 years. So if you are not holding this company and if you want to buy, definitely this is the time to make new entry. You can buy this share. If you are already holding and if you want to add the tranche, you can add here. But you should not sell. You should not make profit booking. Thank you so much to all of you for watching my video. And if you have not subscribed my channel as yet, please subscribe my channel and share to all your friends and relatives. Thank you so much